A very good evening to all. Today I am going to discuss with you a very important topic, that is the GST year end checkpoints. What are the points we have to remember while closing the books of accounts? I will request everyone to take a pen and paper and start noting down the same. The first point we have to see whether we are export oriented or are we doing export. If we are doing export, we have to apply for LUT license. If not applied, please apply for the same for 24-25 immediately. The next point is, have we opted for composition scheme? If we are for a composition scheme, then we have to apply for composition scheme on or before 31st March 2024 in CMP 02. Then we have to apply for composition scheme if we are already applied for composition scheme for 23-24. Then we have to apply file form GSTR 4 on or before 30th April 2024. Then the time limit to apply for QRMP scheme to opt in or opt out by 30th April 2024. If we are a GTA, then we have to apply in the file the annexure 5 or 5A 6 to opt for the forward charge mechanism or reverse charge mechanism by 15th March 2024. These are very important from the angle of compliances. Now we will see what are the important things for reconciliation for the financial year 23-24, which you have to take care. First one is we have to match our outward supplies as per the books must be matched with the GST returns, books versus GSTR 1 versus 3B. This may help us indicate if any amendments are required to made to the GST returns, turnover plus taxes including RCM. Then the rate-wise reconciliation, if we have having multiple rates, then we have to do rate-wise reconciliation so that our books tallies with our return GSTR 1 returns. Then the next one is reconciliation of balance of credit and cash as per the GST portal with the balance appearing in the books. Variance indicates monthly entry errors or possible missed out or excess claimed ITC. The next point is GSR 2B versus ITC register books, invoice level tracking of eligible and ineligible ITC in the books of accounts, and reconciliation to the ITC disclosure in GSR 3B for the financial year. Spillover transactions to be specifically tracked. Then the next point is we have to identify the pending ITC which we have not claimed so that we can optimize the ITC claim, follow up with the vendors where required for updating or amending their GSCR 1 returns. The next point is the verification of credit temporarily reversed and action taken that is claimed or considered as permanently ineligible. The next point is verification whether the RCM paid matches to RCM ITC claimed other than ineligible ITC. The next point is HSN consolidated through GSR 1 versus books value. Ensure that the electronic rate reversal was and recreate statement has been updated with appropriate data. Ensure bill e-way bill reconciliation with GSCR 1. If we have not done e-way bill reconciliation, I would request everyone to do the reconciliation so that if any entries are missing or if any action is to be taken, the same to be taken before 31st March 2024. Then the reconciliation of e-invoices issued during the year visa, the e-invoice required even for GST credit notes and GST debit notes. The book's inventory versus the physical inventory assess if the ITC reversal to be required or may indicate accounting lapses plus missed out ITC. Obtain confirmation from customers that the ITC has been reversed against the credit note raised. Alternatively, can be part of the tax clause in the agreement or MOU, etc. Most of the above checks would also prove useful while preparing the annual returns in the form GST 9 and 9C. Then next we will be moving to the outward liability. Verify if any GST debit note or credit note should be issued for any value short or excess charge or any sales return by the customer. Time limit applicable only for the credit note latest by 31st March, 31st October. Verify the agreement clause on the discounts to be provided and the requirement to issue credit note. Verify compliance of the Section 18 Class 6 for the transfer or the sale of plant and machinery. Consider the valuation check in the case of related party transaction. Verify the supply of old vehicles, including possibility of payment of GST only on the profit margin in terms of the notification number 8 2018. Review of tax utilization entries passed in the books of accounts vis-a-vis the electronic liability ledger. Reviewing the data's aging reports tax implication on the customers, that is, their ITC would not be eligible until the payment plus MSME non-compliance is useful for realization. Review of outstanding amounts towards the export of services and in case of goods where the refund claims are being made. Amendment in the GSTR 1 changing the outward supplies from B2C to B2B or the type of tax passing on the credit to the customers before the time limit can issue the standard instructions. Change is not accepted before beyond the financial year end. Cross charge, check for the cross charges between distinct persons and related parties. Between distinct persons and the related parties. Verify the GST or CGST, HST paid instead of IGST and vice versa and correct the same. Verify the income from other sources, if any, liable or not liable for GST. For example, employees' recovery is not payable recently classified incentive or discount. GST liable on interest charge for the delayed receipts. Verify the expenses created in the books of accounts which may indicate income accounted as a part of expenditure. Verify and ensure applicable GST on the same. Ensure GSTR 1 matches the 3B. In case of mismatch, ensure reply to DRC 01B notice is done within 7 days periodic. Export proceed EBRC receipt within 9 months can be verified. Linked to the FEMA if not eligibility of zero rated supply questionable. Standard terms in contracts to avoid future disputes. ITC credit note issued would be considered as reversed. We are in compliances with the GST law. Standard terms in the contract to avoid future dispute. ITC, that is, the credit note, if any, issued would be considered as reversed. We are in compliances with the GST law. The inward, the points to be noted for the inward timing of available of credit as per the section 16 RCM credit on advance ineligible, etc. Rule 37 check for ITC reversal required an account of non-payment within 180 days or reclaim of any ITC in respect of suppliers for which payment has been made. Rule 37A, check in GSR 2A whether the vendor has filed the 3B. This will help satisfy the Section 16 Class 2 Class 3 of the CGST Act. We were not filed. ITC must be temporarily reversed and can be reclaimed once the GSR 3B is filed by the vendor, irrespective of the time limit. Expenses for plus ITC not accounted identified through GSR 2B. Check if any reversal required against the purchase goods rejected and returned or other credit to the expenses ledger ensures the impact of same has been considered in GST returns. Verify against the credit note reflecting in GSTR 2B. Ensure vendor credit note reflecting into GSTR 2B are correct and ITC is reversed against the same. If not, communicate with the taxpayers to amend or rectify such details in GST returns. Accounting of credit where details are not reflected in GSTR 2B, deferred input accounts, re-evaluate before October of coming year and consider the charge to the vendor and passing of an expenses. To verify whether the ITC has been reversed on the entries passed due to the write-off of inventories, assets, theft, sample destructions, obsolete, etc. Verify the compliance with ISD provisions where were not done, whether cross-charge can be complied to ensure procedural lapses only can be examined. Credit CGST or HGST availed as IGST or vice versa must be rectified within the time limit. Credit availed in different GSN of the same associate plan to be rectified. Re-verify ITC masters and conditions used for classification of eligible ITC. Ensure not incorrectly classified under ineligible ITC. RCM accounting of entries passed for the transactions covered under the RCM. Some systems do not allow compound entry in the direct expenses, for example, flight RCM. RCM liability on the foreign associates enterprises based on provision entries in the books. Analyze the GST provisions by verifying the expenses, flight and transport payment even if under 5% ITC eligible. Uh, Residential dwelling by commercial entities, advocate payment, the security services not applicable when the provider is body corporate, renting of motor vehicles, import of services with or without consideration, useful source, Form 27Q and Form 15C A of CB, is sponsorship or advertisements and marketing, fees and license to various governments by central government or state government or local authority only, various exemptions available. Analyze the GST on the Section 9 Class 4 expenses, real estate only. GST returns for the financial year can be amended with above correction or deletions or modifications latest by 30th April 2024, that is October 2024 GST returns. Others, filing of application for the refund claims. If we have to take refund, then we have to file for the refund claim. Stay updated on GST portal for notices on department communication, ignoring the same can amount to gross compliance consequences. Ensure mobile number or an email ID on the GST portal is functional and valid to avoid miscommunication. Ensure other authentication is completed on the GST portal. Verify the year-end accruals of provisions entries for transactions with the related parties and evaluate GST implications, import of service possibility. HSM 6-digit level mandatory requirement from 1st April 2021. ensure correctness and display in the tax invoice for greater than rupees 5 crores. Obtaining GST registration in other states where the supplies are made complies with the concept of fixed establishment, supply, etc. Interest to be paid on utilization of ITC only that too at 18% per annum. Tax paid under protest, pre-deposit or department visit, ITC reversed under protest, ensure documentation of the letter of protest. Documentation of notice, letter, copies, replies, mails, etc. in the separate correspondence file. Maintain data of inward, outward, RCM, e-way bill document for 6 years from the annual returns due date of the financial year for 23, 26, 24, 6 years. Conclusion: the burden of proof is directly proportional to the GST compliance now. Better compliance is easier it is to provide information, avoid or dispute the departmental notice, and ensure the taxpayers can focus on his business. Additionally, taxpayers are expected to ensure the vendors' compliance alongside their own. This would require the implementation of the sound internal controls, implementation of technology, in introduction of an indirect tax SOP, and regular training and update to the GST compliance. Thank you very much. Catch you tomorrow.